Hey members, we had a rough day in the market today. Let's talk about Bitcoin and where the stock market's heading as well, because we talked about this move happening probably Tuesday or Wednesday. It happened today earlier than expected. So let's hop into it, okay? Now, as far as Bitcoin's concerned, everybody, pay attention. We finally did break down below that 50 after the pump up here that was actually looking pretty nice as we tested out $24,000. Now, because of this, our next support for Bitcoin is going to be down here around 22,300. I'm still okay watching this play out for now, but if we start breaking down below this, everybody, that's where things get a little bit more disastrous. And while Bitcoin is only down about 4% today, you guys can see this right here. Matic is down 8. Dogecoin is only down 4, thank God. Link is down 7. STMX is down 10. You're seeing a lot of the same moves here after they've all broken down below those 50 moving averages there. There are some things like GAL that are down a little bit more, but I want you guys to zoom out a lot more for a lot of these plays because it looks like the 20-day moving average is really going to be the next step here, okay? Got UFO coin here, got rejected off of the 200, all these levels that we were talking about over the weekend. Right now, Ethereum is close to breaking down right here, and this is the thing that concerns me. This is what I don't want to see happen if we do break down below that moving average. What I'll say, though, is Ethereum is barely holding on, barely. If Ethereum starts breaking down, to me, that feels like Bitcoin's going to continue to go back down all the way to the 22,300, which is only about $400 less than where we currently are, but that'll make the market move even more drastically. Um, be careful as far as this is concerned, but now we're going to move over to some other stuff. You guys can just see the carnage on the right hand side of my screen. We had already talked about this and what happens if we break down below the 50 moving average. Okay, shouldn't be a surprise. Now, as far as the stock market's concerned, we had talked about this at length yesterday about how, as far as everything was at levels of resistance, and this week is really going to be that big week where we can test everything out. Apple, Google, all of these things, they've all unfortunately managed to come back down. Apple, for this instance, is getting rejected off of the 200 daily moving average here. Not anything terrible, of course. If we go over here to the 14-hour chart, you'll see that we're still in this general uptrend. Tomorrow is the day where things can get nasty. And by nasty, I don't mean Apple's going down to 120 or something crazy like that. But if things don't look good, we could possibly come down another 2.5% to back down to 138 levels or so, okay? And that would signal a breakdown, in which case you might see people looking for Apple to come back down here to 138, possibly down here to 133, which could put a lot of stress on the market, especially since we just broke out. You see Microsoft here over as well. While we did hit some levels of resistance, we're still in a decent uptrend here, and there's nothing too crazy at this point. We're all just running into these levels of resistance, and that's a-okay. The main goal here is that we just find a way to consolidate for the next few days until we get all the earnings news. Google earnings, Apple earnings, and then Amazon earnings. That's what's going to push us back up here as far as federal rate hikes. I think the consensus right now is actually more of 25 basis points and not 50. If it really is only 25 basis points, I don't think it'll do much harm for the way we see the economy going forward. 50, that might be a little bit more of a surprise now, and that might cause more harm. Some of the other plays that we've been talking about is Tesla as well. Tesla's coming back down after having a monster break on the 4-hour chart. Look over here. It just ran back up into the selling zone. We had been talking about these zones for a while. Probably best to should drop for you right there. Came up, and it's still within that zone right now. But if it does start to break back down, that's where Tesla, unfortunately, starts to go back down here to maybe 155, which is still a very good spot relative to like the $100 you had an opportunity to buy it a few months ago. Okay, so be careful. We're still watching to see if it curls back down or not. I'm not perfect on this. I think it's going to have that curl effect that we've been talking about for the past few months, but past few weeks. But let's see how this plays out. As far as Amazon, though, we do know we have earnings coming out pretty soon. You can see it coming up in a few more days here. On the weekly chart, we did in fact have a breakout, and if I show you guys like this, we're still above that breakout. So I don't want you guys to think that the world is ending. We're coming back down and now having a little bit of a breather, so to speak. But we have broken out and we're still above that breakout level right now. If for whatever reason these small flags that we were kind of playing around with, like here, and here, if we come back into here, that's where you guys might start to be a little bit more concerned because the market may be coming back down despite all the breakouts that we had because of fundamental analysis and some of the scary stuff that may be happening as far as the economy is concerned. Okay, I know a couple of you guys are talking about buying puts and stuff like on stuff like Caterpillar. I was hoping that Caterpillar might actually come back up a little bit more. And you can see today it did not actually go up to that resistance level that we were talking about. I don't know why this isn't showing up that resistance level. Because it was a basic Fibonacci level, I think. But basically, even today, if we go back up here on the 4-hour, it wasn't the worst of days, okay? Probably let's go over to maybe an hour chart. Yeah. We came back down, but we're just gearing back up here, and we're still, guys, no matter how you look at it, most of these assets are still above their support levels because of these last breakouts that we've occurred over the past few weeks. If we have a multiple days of going down, that's where things can get a little bit more dicey. But for now, we should hope that come Wednesday or tomorrow, we're going to have more of what you might call just a boring sideways day, and that's what's really going to get the market doing okay. Now, if we have something that's pumped up a lot like Nvidia, of course it's going to drop down a little bit more drastically, but you can see Nvidia, for the most part, it actually did break down here, but you can see how that support level wasn't really the strongest, right? Short support, I would say, for Nvidia and a lot of these other plays, it's a little bit lower, kind of right around here. This little range of about 190, 152 to this range right here of 187 or so. That's the range I'm looking for. If we decide to break back down below that, you may see Nvidia come all the way back down here to the 160s, which would be catastrophic if you guys are holding any longs there, okay? Oil got hit hard as well today. I mean, the whole market pretty much got hit hard if I just go over here to Finviz and show you guys, although I'm pretty sure you guys know at this point. Whole market was down. There was a few things that were up, but that was like Colgate, O'Reilly, Yum Brands, AT&T a little bit, Verizon a little bit here, IBM. Most tech was down. Nvidia down 6, Google down 3, Meta down 3, Amazon down 1.5, Tesla down 6. You're going to see this for the next few days, but just hope that each of these individual stocks hold up against their individual technicals. That's how you know they're going to do okay or not. As far as Apple, we're close to a breakdown, but over the next few days, the main goal here, guys, is just to break out above the 200 daily moving average. And so if we do manage to break down here, and of course it all depends on which trend lines you're using and which time frames, if we do break down, we're probably just going to come back down here to the 130s, which isn't the end of the world. But just be careful at everybody. There's no real big news coming out today that I've heard so far, but just be patient. Watch this out. You guys could always use some of these other resistance levels over here. Maybe Apple comes back down to 134. You see stuff like the NASDAQ also coming back down a little bit more. But overall, I'm not too overly concerned about this. It's just that we're all at major levels of resistance, and we're going to have to figure this out bit by bit. You can see over here, again, hitting resistance for the Dow Jones, the NASDAQ breaking out and unfortunately breaking back down below the trend line here and the 200 daily moving average. Whenever that happens, although it's a bad sign going forward, it doesn't mean that we're going to be crashing back down here. A lot of times the fact that we broke out means that this breakout is now a little bit weaker. So the next time we come out and retest it, it's not going to be some hard level of resistance that slams us back down like it did here, and so forth, right? Move that line back up there. There we go. So keep an eye on this. The goal for right now, same with what we've seen with a lot of other assets, we're in a pretty steep uptrend. Over the next few days, we just don't want to break down below the uptrend. And unfortunately, we had a great breakout, but it didn't work out. And so now we have to figure out the next plan here as we head into all this earnings mess. If earnings are good, we're going to be blasting off this week. If earnings are not good, we're going to be crashing back down at maybe the NASDAQ, probably back from the 12,000 level we're at now, probably back down here to like 11,247. So not even 1,000 points, but still a pretty substantial drop going into Friday. And then possibly next week is where things get a little bit more risky, okay? So have a good day, everybody, but don't panic. Watch your plays out here. For all everybody that we were talking about puts today, those puts are probably working out pretty well. If you guys want to add more onto them today, you guys can. But just understand overall, the earnings are going to determine how we look Friday. And of course, people are just maybe a little bit more concerned about the federal rate hikes that are coming, about the 25 to 50 basis point rate hikes. Okay, thanks.